5 seconds to go. Start. The macro impact on India from the commodity price shock is significant and well known. If oil prices remain elevated, it could drag growth down, raise inflation, and widen the twin fiscal and current account deficits. What is not as obvious is the more granular impact of higher oil prices on farms and consumers, which in turn could become the leading driver of growth trends. Now, all firms will be impacted equally by the oil price shock. Through the pandemic, large and listed films have performed relatively better than small and informal firms, and early indicators show that the oil price shock is intensifying this divergence. Let us explain. Our study of the RBI's database of around 2,700 firms shows that during the pandemic, large firms have taken market share from smaller firms. Their profitability has also risen while that of small firm has not. This is likely to be a result of several factors benefiting large firms more: their ability to cut costs, a lower interest rate environment, and access to buoyant capital markets. The underperformance of small firms comes in two distinct phases. One, the lockdown periods in early 2020 and early 2021, and 2, the commodity price shock period. Commodity prices have been rising since mid 2021. Small firms, particularly in the uniformal sector, typically have smaller cash buffers to withstand long periods of turmoil. Several weeks in the lockdown is likely to have hurt them much more than large firms. And just as they were rebounding, the commodity price shock hit and pushed them back into underperformance. For two reasons, we think the commodity price shock will hurt small firms more than larger firms. One, India has become more energy efficient, and this trend has been led more by the large firms who have taken more efficiency enhancing steps than the small firms. Two, large firms, by their sheer size, may have more bargaining power when buying raw materials. They can also pass on more of the input cost increases to customers. It is clear from the corporate results that the burden of rising input costs since mid 2021 has been higher for small firms. Survey results show that many have been pushed to shut shop in recent months when prices have been rising. It is therefore safe to say that high inflation is hurting the bottom of the pyramid more. It is not just the large firms that have done well, it is also their employees. Staff costs of large firms have overshot pre pandemic levels by a meaningful margin. On the other hand, staff costs of small firms have stagnated at pre pandemic levels, implying a fall in the real purchasing power of their employees. The recently conducted ICE survey shows that the poorest 20% in India have seen a 53% decline in their richest incomes between 2016 and 2021, while the richest 20% have seen a 39% increase. Stop.